pay for all the QE that's happened so far. What's that mean in terms of what happens at this Fed meeting?
Well, you tend to have pluses and minuses on this, and we've gotten the benefits of it. You saw in Japan they've had 20 years of this, and you would see their stock markets go up when they'd first do QE, and then they'd come down as the QE rolled off and as they didn't redouble their efforts all the time. And the problem that the Fed runs into is, how do you get out of this? Their balance sheet has swelled. Who's going to buy this stuff when it's time to sell? Now they say that, well, it's all going to run off. We're never going to get rid of it. But you end up with unintended consequences with this. One of these being that you've got kind of the stock market is bubbling, if you will. I won't say it's in a bubble, but it's going that direction without the fundamentals of the economy picking up and providing a strong foundation for it.
Could it be a catalyst for a market sell-off?
We think so. We think that what's driven the markets, at this point, are two things. One, you've had housing come back. Problem is that much of that housing has been driven by private equity firms buying homes. Exactly, and that's more of a short-term move. That's actually starting to abate as we speak right now. And I think this last quarter they were 60% of existing home sales. Well, that other 40% isn't going to make up the difference when these guys leave, and they're not there. They're pretty fickle, so they don't stick around long. We also think that the Fed has done a good job of bumping up the stock market, but they just haven't done a good job of bumping up the fundamentals of the economy as a whole. And what we've seen every time that they've either stopped or slowed down quantitative easing, the economy's gone back down and gotten even more sluggish.
In fact, you actually point out in some research that operating earnings growth have been declining, so the fundamentals aren't being helped while stock prices are elevated. Is that why you're so heavily invested in cash right now?
Yes. If you look at over the last year, the main driver of any earnings growth really has been the financials, and much of the financials has been loan loss reserve releases, stuff that they reserved against before, and now that home prices have gone up, they're releasing those reserves. And that's really kind of driven their earnings, but it's not a sustainable thing. That's not ongoing blocking and tackling, earnings that drive stock prices higher. It's kind of more of a one-time.